there has been so many EV companies and startups trying to emulate the success of Elon Musk and Tesla. And in the past month, there has been one in particular that has been making the waves on Wall Street, and everybody is talking about it, that this company is potentially the next Tesla. So in this video, I'll talk about what the company is, what they do, the fundamentals. I'll compare the company with Tesla when back in 2018 when they were at the same level. I'll analyze the daily chart to see where we can potentially enter for a possible trade or a possible investment, because this stock has been going up for the past 7 days straight. And then we will take a look at it and see whether this company can actually become the next Tesla. So let's get started.
Welcome to Ben Talks Money.
The company that I'll be talking about today is NIO. NIO is the ticker symbol. So NIO is a Chinese EV manufacturer that designs, develops, and sells premium smart EVs. The company is known for its innovative battery as a service model and its strategy of building strong community. The company is not profitable yet, but their revenue grew about 45% year over year. The gross margin improved by 7.5% in the last year compared to 4.5% the previous year. The cash flow is looking incredible right now. In the last quarter, their delivery went up by 60% year over year. So they are delivering much more cars right now. They delivered almost 160,000 cars in the last quarter, which is really impressive for a new company like NIO. And if you look at one of the issues that they are facing is intense competition. I mean, if you look at the space, it used to be dominated by Tesla. Now, if you go to China, Tesla can't even sell, right? So they face a lot of competitions. But one thing that makes them stand apart from the rest of the EV companies is their battery technology, right? They have a battery as a service as a service model where you pay monthly fees to get your batteries swapped out. So you don't have to worry about when your battery is going to die and you have to put in a huge amount of money to get a new battery. With your battery as a service model, you pay a monthly fee, and you get the batteries changed every now and then whenever you need it. And if you look at their fleet of cars, they have 4 sedans, the NIO ET5 they have the NIO ET5, the ET5 Touring, they have the ET7, and they have the ET9. So they have 4 sedan cars on the market right now. And if you look at their SUVs, they have 5 SUVs on the market right now. They have the EC6, EC7, the EL6, EL7, and EL8. And their cars are very luxurious when you compare to Tesla. Their cars are very, very luxurious, and the price point is very affordable. They came up with a new model that is not out yet. People are subscribing to it. People are placing orders that is costing about $46,000. And if you compare it to Tesla, probably be about the Tesla Model Y, which is around $80,000 right there. So their price point is very reasonable, and that's also one of the reasons why the company is not profitable, because competition is very high in the EV industry right now, especially in China. So they are trying to also expand to Europe, and if they are able to go through the hurdles, the regulatory hurdles, it will be a great opportunity for them, because the features that they have in their cars are not even comparable to what Tesla has. They are head and shoulders above Tesla. And if they can sell it at a price point of an average of 20,000 or 10,000 less than what Tesla is doing, that would be an interesting competition to witness in the near future. Let's compare Tesla and NIO. If you look at the fundamental metrics, NIO in the first quarter of this year delivered 42,000 vehicles, right? And they've projected to double it in the next quarter. So in the next quarter, the projection is around 85,000 deliveries. And then back in 2018, 2019, 2020, Tesla was delivering about 245,000 cars every quarter at the lowest end, right? So you can see that Tesla had the scale. And also it's because of the fact that at that time, Tesla didn't have any competition. NIO does right now. If you go to China, there's BYB, there is a lot of, Xpeng and a lot of startups in China, right? So that's the competition there. And if you look at the NIO Q1 revenue compared to Tesla's revenue back in 2018, their revenue this quarter was about $1.6 billion for NIO, whereas Tesla back in 2018 had a revenue of about 21 billion. So there's a huge difference, right? And again, Tesla is the pioneer. Everybody else is following. And if you look at the profitability for NIO and Tesla back in 2018, Tesla lost $976 million in 2018. NIO currently lost $930 million. So you can see that Tesla was delivering more cars, more than twice the amount of cars that NIO is delivering right now back in 2018, but they lost almost the same amount of money as compared to NIO right now. It tells you that, two things. One, the production cost is higher right now because of inflation. Price point today is not the same as price point back in 2018. And also the competition is high. So right now there is a price war. At that time, back in those days, Tesla was the only one probably selling EV cars, so they could charge whatever amount that they wanted, right? It's no longer the case. If you look at the margin, there's been a slowdown in margin. NIO's margin right now is about 10%. So, and Tesla's gross margin is about 18%. So that's a huge difference there. Even if you look at the vehicle margin, it's 6.8% for NIO, it's 16% for Tesla. Right. So, and if you look at the market capitalization, NIO currently has a market cap of about 9 billion. But if you look at Tesla back in the 2018, Tesla right now is $1 trillion company. But back in 2018, Tesla market cap was about 50 billion. So they've come a long way. That's where people say NIO has a lot of room to go, right? NIO has a lot of room to go. And so that's it. So let's take a look at the chart and see where we can get in for a possible entry, so that we can maximize our investment. So if you look at the chart, you can see right away that this stock has suffered. So let's take a look at the daily chart. If you look at the daily chart, you can see that this stock has been trying to make a comeback, all the way from $3.30, and right now it's trading around $6. Today it got all the way to $6.70. So you can see that that's almost 100% since July. And the RSI is currently at 71, which is a little bit high. If you look at historically, this stock, the RSI is whenever it touches 70, it comes down, right? So that's our first indicator that we don't have to get in right now. Because if you look at the daily chart, every time this stock touches the over 70 in RSI, it pulls back, right? So it tells me that right now it feels like it's a little bit overbought, right? So let's give it a couple more days for it to cool down. Today is a red day. It seems like it's going to be a red day candle. If you can see the candle right here for the day, it looks like it's going to be a red day, which is good, right? So what level should we look at right now? Because it looks like the 670 level was a support. It's a support right here. You can look at it there. There's a support right here. A support here. Sorry, this is a resistance. A resistance here. If you go back here, it's like in the resistance zone also right here. And if you look at it here too, there's also another resistance zone at the same level. So what we do is that, for me, I'll wait for NIO to pull back into, first of all, to pull back into $6 level and see if we can actually hold the $6 level, right? If we're able to hold the $6 level, it will be a good entry point to start with. But ideally, I would like to see the stock pull back to around 520. If it's able to pull back around 520, at that time, you see this, it looks like moving average crossover is forming right here. At that time, probably that will be around the 50-day SMA. So the play for NEO is to wait for the stock to pull back a little bit. Pull back. First of all, let's see if it can hold $6 level. If not, then the next level will be around 520. If it's able to hold 520, the RSI comes down a little bit, then that will be an entry point for us, right? So that's the play for NEO, is to wait to see a little bit of a pullback, and wait to see a little bit of a pullback, and after that, then we can make our move if everything aligns at that time, right? So this part is that is NEO actually the next Tesla? Does this stock has the potential to be the next Tesla, right? And the answer is probably not. I don't think any of those EV companies are ever going to be where Tesla is. But that's not our goal. Our goal is to ride the momentum, right? This stock is at $6 right now. If we can ride the momentum to $10, $15, that's all we need. That's all I need, right? Because I don't think any company is ever going to be Tesla right now. The reason being competition. There's a strong competition everywhere for EV cars, right? All the traditional car companies are now going into EV also. So the competition is very, very hard. And also because of the competition, there's a price war, especially when you go to China, right? And that price war prevents the companies from increasing their profit margins. So no, NEO is not the next Tesla. No company is ever going to be the next Tesla, at least in the next 5 years or so, right? But this company still offers a good opportunity for a medium to long-term investment, right? I will hold the stock for 6 months to a year to see where it's heading to, while you pay attention to the news around it, right? So that's it for today. Thanks for sticking by and watching this video. And if you have any question, leave it in the comment section below. If there is any stock that you want me to look at, you can also comment in the comment section below. Subscribe to the channel, share, and tell your friend to tell a friend about it. Until next time, let's keep talking money.